Welcome back to the cryptowrld channel, everyone. My name is Josh, and right now the Ethereum RSI on the daily time frame is reaching into oversold territories for the first time in nearly 2 years. Also, on top of that, Ethereum is currently trading below this important support level, but the Ethereum estimated leverage ratio is at record highs. All of that and more in this video, so make sure you're sticking around to the end so that you don't miss out on any of this important information. And just before we jump into it, you might as well leave a like down below, and if you're new to the channel, be sure to subscribe with notifications turned on for more updates just like this every single day. But with all of that out of the way, let's get straight to what this video is about. So right here, we're on the Ethereum to US dollar chart on the 4-hour time frame, and obviously we had that previous bear flag pattern, and technically Ethereum already hit the price target yesterday, but clearly today this pattern has played out a little bit too well. As of right now, obviously we are still in a short-term downtrend. We have not confirmed a recovery or anything like that, but if you zoom out to the larger time frames like this daily chart that we have here, you can see that the larger trend, which is the long-term trend for Ethereum right now, is still bullish, believe it or not, because what we see here on the daily time frame, at least so far, is higher lows, and we are also seeing some higher highs on the chart as well. So obviously anytime we see higher lows and higher highs, that obviously means we are in an uptrend, but that is only on the larger time frames here, because once again, if you're looking at the smaller time frames, we're seeing lower lows and lower highs. So that just means we're in a shorter term downtrend, but a longer term uptrend, at least as of right now. But obviously things can change in the future, and I will be keeping you updated if they do. Now just taking a quick look at the Fibonacci levels here on the daily time frame. First of all, up until a few days ago, we were finding major support along the 38.2% Fibonacci level, coming in at around 3.6 to 3.7k, but the moment we dropped below that exact level, Ethereum immediately fell down to the 50% level, which was coming in at around 3.3k approximately, and at the time of filming this video, Ethereum is currently trading below that level, but right now we have not seen a daily candle close below that level, at least just yet. But if we do end up seeing some more confirmation for the break to the downside below this 50% level, then it is a possibility that we could find our next support at the golden pocket, which is starting at around 2.9k. But one level that stands between the current Ethereum price and the golden pocket there to the downside becomes visible if you're drawing the Fibonacci retracement tool from the September low instead of the July low. And so obviously this gives us some slightly different Fibonacci levels to pay attention to. And what we have right here is the 78.6% Fibonacci level coming in at just above 3.1k. So basically the main support levels to pay attention to here in the shorter term is around 3.1k, and anything below that then around 2.9k approximately, where that previous golden pocket was coming in at that we were just discussing. And just before we take a look at some other really important Ethereum charts later in this video, I'll first talk about the fact that the Ethereum RSI on the daily time frame is now reaching into oversold territories for the first time in nearly 2 years. Seriously, the last time Ethereum was oversold on the daily chart was all the way back in March 2020. But aside from having the RSI in oversold territories, what are some other things that these two areas on the chart have in common? Well, one of the main similarities between these two areas on the chart is the fact that we saw a lot of bearish price action leading into both of these areas on the chart. And on top of that, the state of the market during March 2020 and the state of the market that we're seeing right now is basically sitting in extreme fear. There's a lot of panic going around at the moment, and we normally see this type of thing happen when we are getting really close to a bottom. This is not just my opinion or my prediction, this is actually what the charts say. You can even look back at the end of 2019, we saw oversold territories in the Ethereum RSI on the daily time frame, and if you're looking at the corresponding price action at that time, that was also when Ethereum was bottoming out, getting ready for another move to the upside. So obviously this is not financial advice, but what I am doing right now is just continuing to dollar cost average into Ethereum, because soon enough it's only a matter of time until we begin to see some sort of recovery, or at the very least some sort of relief rally. And seeing signals like this on the chart right now, honestly that might not be too far away, as in within the next 1 to 2 months approximately, but that is being quite conservative. Now taking a quick look at the Ethereum estimated leverage ratio, which is right now exploding to the upside. And for the complete beginners out there, the estimated leverage ratio, which is this purple line just here, is calculated by dividing the Ethereum open interest across exchanges by the Ethereum reserve on exchanges. So essentially this Ethereum estimated leverage ratio, which is the purple line just here, shows us the amount of leverage in the market at the moment relative to the amount of Ethereum on exchanges. And so when this estimated leverage ratio for Ethereum is going to the upside, that means more and more people are seriously leveraging up on their positions. And normally when we see an increase in leverage while the price is increasing, that usually means a lot of people are piling into long positions, and then eventually we see a flush out of all of that leverage in the form of a long squeeze, which basically crashes the price of Ethereum. And that's basically what we saw in May last year. But then on the flip side, when the price of Ethereum, which is this black line just here, is trending to the downside, and we're seeing the amount of leverage trend to the upside, that usually means more and more people are jumping into leverage short positions. positions. And then eventually all of that leverage will be flushed out of the market in the form of a short squeeze. And that's exactly what we saw in around July 2021. And so what are we seeing right now? Well, obviously over the past 1 to 2 months, the price of Ethereum has been in this downtrend. Meanwhile, over the past 1 month, approximately the amount of leverage on exchanges relative to the amount of Ethereum on exchanges has been exploding to the upside, which gives us a very similar situation to what we saw back in July last year. And so what came next for Ethereum? Well, after we saw that initial spike to the upside, it was still around 1 to 2 weeks after that we finally saw all of that leverage get flushed out of the market. But when that massive flush out did end up happening, that basically was in the form of a short squeeze once again, which sent the price of Ethereum in an incredible pump to the upside over the next couple weeks approximately. So basically right now it's just a waiting game. We're just waiting to see all of this leverage get flushed out of the market, which could really be any day now, but could take up to a few weeks from now. And then when we do eventually flush out all of that leverage, it is quite likely that we would experience some sort of short squeeze similar to what we saw at the end of July leading into August. And to back that up, what we're seeing right now on all of this exchange data is the majority of the money at the moment is sitting in short positions. As you can see, out of all of these exchanges, there's only around 2 to 3 that have more long positions than they do short positions. But then all the rest, which is obviously the majority, are in short positions compared to long positions. Now, giving you a quick update on Ethereum versus Bitcoin here on the daily time frame. Right now, we are running into a very important support level, coming in at approximately 0.076 Bitcoin per Ethereum. This was previous resistance for Ethereum and should now be acting as new support. And obviously, if Ethereum sees a bounce from that level, that would be great to see. But if we see a confirmed break below that support level right there, then that would basically invalidate this symmetrical triangle pattern and potentially send Ethereum down towards this low just here at around 0.07 Bitcoin per Ethereum. And that's not just because we previously found support at that level. If you're bringing out the Fibonacci retracement tool from this low at around 0.06 Bitcoin per Ethereum up to the recent high, what we could see here is that is the golden pocket for Ethereum versus Bitcoin. Once again, sitting at around 0.01 Bitcoin per Ethereum, but that only comes into play if we break below this important line of support that I just mentioned. And one reason why Ethereum is pulling back a little bit against Bitcoin in the immediate short term is because the Bitcoin dominance is still finding support at that huge horizontal line of support coming in close to 39.5% approximately. And so as I've been letting you know, if we see a strong confirmed break below that point of support, well below 39% for example, then that would be very bullish for the overall altcoin market because that would mean that Bitcoin would be losing market share to the altcoins. But of course, what we're seeing right now in the immediate short term, looking over the past 1 to 2 days, we are seeing a little bit of a short-term bounce here in the Bitcoin dominance, meaning that the altcoins on average are underperforming against Bitcoin. And so that is why Ethereum is pulling back at the moment against Bitcoin here in the shorter term. And by the way, I shared part of the content included in this video around half a day ago over on my Twitter. So it seriously pays to follow me over on my Twitter. And of course, it is completely for free. And the link to my Twitter is in the description down below and also in the pinned comment. If you enjoyed this video or got something valuable out of it, please make sure to leave a like down below. And if you're new to the channel, be sure to subscribe with notifications turned on for more updates just like this every single day. For anyone new to the channel, before you click off, you might as well check out one of these uploads if you haven't already. And as always, I appreciate every single one of you here on the channel. I can't thank you guys enough. But anyway, that is everything that I have to say for today. I really hope you enjoyed and I'll see you all in the next video.